or this timeline we're going through right now is worse than the crash of '08. The time now, it's like getting gum stuck in your hair.
Those are the words from an expert. This is a strange time in the real estate, the housing, and the mortgage industries. Should you buy now? Should you wait? San Diegans, should you sell? I'm Heather Myers, your go-to realtor here in San Diego County, and I follow the housing market so you don't have to. Every day I talk to my clients who are buying and selling in San Diego County, and they ask me, is now a good time to buy? Is this the best time to sell? Or should I just wait? Well, today we're going right to the expert. He has a hugely popular page on Instagram. It's called Whatsamortgage. He's also on TikTok and YouTube. Minh Nguyen is here, and we're going to ask him all of your questions. Let's get started. You probably follow his page on Instagram. Minh Nguyen from Whatsamortgage is here. First of all, Minh, thank you so much for sharing your expertise with everyone today.
Thank you for having me.
All right, let's jump in because I have a lot of questions that I want to run through, but we kind of chatted a little bit off camera, and you've been doing this over 20 years, so you have seen so much in the past 2 decades as far as mortgages and their overall real estate industry is concerned.
Correct. Yeah, I've seen the trends. I've been through the crash, so I've seen it all.
So tell me your overall vibe right now, 2025. We're almost halfway through the year here. What are you feeling? What are you seeing in the market? Let me just give you the floor here.
I say this incident, what we're going through, or this timeline we're going through right now is worse than the crash of '08. The crash in '08, it crashed and we rebound within a year or two, got back to normal. This change happened recently, what, 2022? It was, I think, February 2022. It's been 3 years now. It's still lingering and it looks like it's going to keep lingering. The time now, it's like getting gum stuck in your hair. And you're like getting pieces out, but you can't get it all out. It's just like slowly trying to rip out pieces, but it's just not happening as quick as it did in 2008.
That's such interesting perspective to hear you say that. And do you mean by this feels worse because it's just dragging on and on and on?
It's dragging on, and it's becoming more polarized because of politics. The '08 crash happened. Everyone was mad at hedge funds because they hedge funds or and no, everyone was mad at the banks because the banks pretty much went got greedy and crashed the market and they got bailed out. So there was one enemy, the big banks. Now the enemy is you got right versus left arguing over who's right, who's wrong, who did it right, who did it wrong. Did it bleed over to this person's administration or is it bleeding over this person's administration? It's just nasty now than it was back then.
So do you mean like just the fact that the market is sluggish and people are sitting on the sidelines and they don't know what to do?
Correct. So there's two things. There's the politics, so like no one trusts each other. So when you give advice, if you give advice, let's say you are amazing at your job, but because you like one side or you like some video and it belonged to one side, now the other person is like skewed by your information, so they don't trust you anymore. I think because people are so skewed on both sides, it's really hard to know who's right and who's wrong to trust when you're trying to make this big decision because buying a home is the biggest decision people are going to make in their lives and there's so much uncertainty and you want to believe and trust somebody and it was okay, but of course recently last couple of years you don't know who to trust anymore. Like you might love their content, but now because they picked one side, it's just weird. It's hard to see who to follow. And that's
Yeah.
like why people are so indecisive, and that's why they're sitting on the market, and that's why when they finally are ready to believe somebody and go out and move forward, they're priced out of the market.
Yeah, I couldn't agree more. I've seen it happen. I've experienced it myself with clients who want to go look at all sorts of houses, and then some new news hits the headlines, and now they're not buying anymore, or now they're not selling anymore. So you're spot on with that. As far as rate fluctuations in 2025 affecting buying power for the average San Diegans, Southern Californians for that matter, what are you seeing?
People are losing buying power. And, every time rates go up, you qualify for less. So as rates climb up, more and more people lose buying power. But the only problem is people aren't forced to sell. So if rates go up, they just don't put their house on the market. So before when rates went up, people were, had adjustable mortgages, they were still forced to sell their homes. So these homes would flood the market, bringing down prices. The problem now is rates go up, less people qualify. The person who was going to upgrade, well, it's too expensive for them. They're just going to sit still. So if all these people who have 30-year fixes aren't forced to sell, that's what's keeping the prices from coming down. They're just lingering until when the market's right, then they'll just sell it and then prices will push back up.
Yeah.
That's the biggest issue we have is that we live in a subscription economy now. Okay, we did in the past, but I emphasize a lot more now because look at Netflix, look at Prime. It's a subscription world. So we live in this subscription world where mortgage payments have become a subscription, and what we know about subscription is what they rise with inflation. So it doesn't matter if prices go up or down, rates go up and down. Mortgage payments will rise with inflation, and that's the problem. That's why so many people are getting squeezed out of the market.
Yeah, I mean, we're seeing it all the time. Let me ask you this. What types of loans are more popular right now? FHA, VA, something else? And are there certain loan programs that buyers out there maybe are not aware of that could have more people entering the market?
I think if you're in the San Diego market, I think that's the market you specialize in,
Yeah.
or all of Southern California. If you're buying in San Diego, here's my take on it. If you are going with a jumbo loan or an ARM, go to the banks. If you go to the banks, you're going to qualify with a lower rate because they have lower rates. That means you're going to qualify for more home. If you're going to go conventional FHA, VA, go to a mortgage broker, which has a low rate, which allows you to qualify for more home. Of course, if you go with down payment assistance, it doesn't really matter where you go because the rates are been set by down payment assistance. But it all depends on your program. I mean, depend on your scenario. Based on your scenario, that will dictate where you go. But through what I just told you, those banks will specialize in those categories with lower rates and lower closing costs, which should give you more buying power and extra money to either wipe out debt or buy down the interest rate.
When you're talking to first-time home buyers or people that maybe they own something and they're just ready to take that step up, but they feel like, I don't know if I can like double my mortgage payment. What do you say to people? What's your advice to people at this point? Or is it really a case by case scenario?
I think it's a case by case scenario, and I ask them, what are your goals? Do you want to own a home? Why do you want to own a home? Most people, the reason why they want to own a home because they are afraid that rents will keep rising, and the longer they wait and they don't buy a home, that mortgage payment will rise as well. So if that's your fear, then you should buy. But if that's not your fear, or you have another game plan that will outpace inflation, then don't buy a home. So, like I said, it's a case by case. I looked at somebody where their mortgage payment was 10,000 and their rent was 3,000. That's a $7,000 difference. I'm like, hey, can you do something with that 7,000 to make you money? And he says, no, but long term, I still want to stay in California. So I told him, well, it's going to keep rising. So if you buy now, it is a big sacrifice, but just understand that later on, you're not going to have to worry about it. So if that's more important than buy.
Yeah, that's true. And they're right. The rents are crazy and getting crazier. So I understand people's fear, and that's a very, very valid fear to be worried about the rents just basically pricing them out of even the rental market.
The
Let's
crazy
talk
thing,
about mortgage.
one
Yeah.
crazy thing here, Heather, like I tell people all the time. So let's say inflation moves at 3% for rent. So if you take $2,500 a month at 3% inflation in 30 years, you're going to pay 6 grand a month for rent. That means 30 years from now, your exit strategy, if you do not buy a home, be ready to cover 7 grand a month in rent. And if you're going to use your 401k, don't forget you can get taxed on as well. So to have 70, actually 6,000 a month, 72 grand a year in rent. That's a lot.
It's a lot when people are probably looking to retire in 30 years.
Correct.
All of a sudden you're paying that much in rent. So yeah, that's pretty scary. As far as the mortgage rate buy downs, can you explain how those work and why sellers might want to offer this as an incentive?
There's two types of buy downs. So when you're buying down the interest rate, you have an option to buy down permanently, or you have an option to buy down temporary. So let's talk about the permanent buy down first. So a lot of uh, new construction and a lot of people who are selling their current home are offering to cover these buy downs because they feel if they can lower the monthly payment, it's going to open a wider gate for more buyers to enter the market to buy their specific property. So think about this. If let's say Mercedes is 100,000, you have people who can buy it, but not that many. But if you drop the price, the more the price drops, you're gonna add more people who qualify to buy that Mercedes. Now you can sell more of it. So that's the reason why. That's for a permanent buy down. And typically right now, let's say your loan amount is 600 grand. If you pay 12,000 bucks, which is 2%, you can probably bring down the rate about 0.75. And then there's a second thing, there's a temporary buy down. Temporary buy downs where you believe rates are going to drop eventually. So what you would do in year one, let's say rates are 7%. The first year, you're going to pay 5% in rate, 2% buy down. Year two, you get a 1% buy down. You pay 6%. And then year three, you go back to the 7%. So these temporary buy downs are good for people who do qualify. They just want payment relief now as they adjust to home ownership.
And then they can go ahead and refi 2 to 3 years down the line and just cross your fingers that the rates are lower than where they are now.
Correct, correct. And the cool thing with temporary buy downs, whatever you haven't used, let's say you've only been in your loan for 1 year and rates improve, the difference that you have not used towards your temporary buy down, you can use that to as a price reduction. I mean, as a loan amount reduction, and then you can use the difference to cover your refinance.
Okay, so that's an option for people. Are enough people asking about that right now? I feel like that would be really beneficial to buyers.
A lot of buyers are asking for a way to get a lower payment, and this is what loan officers are telling them. They're really big with new construction right now because with new construction, remember, all the closing costs is already built into the purchase price. So when you buy the home, it's already built in, and you just need to allocate that money to buy down your interest rate.
Okay, great advice. Love it. And then that's something that huge for buyers right now. That could make a big difference between buying and not buying. The biggest financing lie that sellers or buyers are believing right now.
That people believe when prices come down, mortgage payments will come down as well, which is not true. Like I said, entry level mortgage payments will rise with inflation. So it doesn't matter if prices go up or down, rates go up or down, that payment will rise. Unless you're coming in with 30 to 40% down or paying cash, don't try to chase the market on waiting for prices to come down because it's not going to change your payment.
Can you dive into that just a little bit more as far as helping people better understand that? Because I feel like people are standing on the sidelines going, I'm going to jump in when these rates are back down to below 6%. I'm just going to stand here. I'm going to wait.
So you stand and wait. Let's say you stand and wait and no one buys. Well, if no one buys, most people are probably not going to sell their house either. So the prices are going to sit still because there's an inventory challenge. But let's say prices do come down. Well, why are prices come down in the first place? Because people can't afford the home. So if they can't afford the home, what happens, right? If they can't afford them because the payment went up. So if the payment went up and the price go down, then what's the big difference? So like, I can't afford it because those payments are higher. So if prices come down and rates are up, they're just in this stage. But let's say rates come down. What happens when rates come down? Prices will push back up. And what happens? Payments are still high. So you're sitting here waiting for this both price and rate to come down at the same time, which is not going to happen. There's a reason why the demand is not where it's at. It's because of payment in the day, and because of payment. So that's the reason why.
Yeah. Good to explain because I love people hearing from you, from the expert himself, because they don't understand. They're waiting for these rates to come down. The second that happens, the
Mhm.
prices shoot up. I
Just
mean,
understand this. Like,
cause and effect.
that's how I look at it. Like, mortgage payments will never drop below rent. No, that's for sure. Because then more people would buy than rent. It's not going to happen, right? So if mortgage payments aren't going to drop below rent and rents keep rising, what do you think mortgage payments are going to do? Keep rising with it, and people don't understand that. So where you're living now, what's the average rent? Like where I'm at right now, the average rent used to be 2,800 bucks to 3,000. Now it's 4,300 bucks. You think a mortgage payment is going to be below 4,300 bucks? No. So just understand that concept and know that if that rent has climbed already, there's no way your mortgage is going to be able to drop below that.
Yeah, and when I'm seeing single family homes for rent, people would love to pay $4,500 a month. They're paying a lot more than that for a single
Yeah.
family home here in San Diego, and I'm sure they are where you are too.
And I think about that years ago when people were saying that was a crazy number for a mortgage payment and the people who actually bought, they're the ones breathing and enjoying their lives now.
Yeah, they're so glad they bought. And I want more people to experience that too. And I understand the plight that they're in. I really do get it. The biggest red flag in a buyer's loan offer that most sellers miss.
Um, it has the income been verified by the underwriter. That's the number one reason why loans fall out of escrow is the income was not has not been verified by the loan officer, by the underwriter. And that happens so often. A consumer goes out and they get pre-qualified, and oh, I'm going to shop it with five different lenders. So every lender is trying to do their best to speed up the pre-approval process, and they miss stuff. And then what happens? They go into escrow, and all of a sudden now the underwriter sees the income and they deny the loan, which happens a lot. So I think if you are really serious about buying a home, when your lender pre-approves you, just make sure your lender takes your income and verifies it with an underwriter. So once you clear the income, everything else is just um, pretty easy peasy. Even if you're self-employed now, lenders are verifying bank statement program loans. So the banks don't want fallouts. The loan officers don't want fallout, but they have a fear with the sell I mean with the buyer. Like, oh, you're asking for too much documents. Oh, this other lender didn't ask for it. Oh, I just didn't see quick pre-approval. I'm going to see right an offer this weekend. No, stop. Get your income looked at and have an underwriter review it.
I wish that I could like make a billboard that said before you even shop around at homes, you need to be 100% pre-qualified because it's like going to the store and you're looking for a pair of jeans. Well, what store do you go to if you don't know what you can afford? And the only way to know what you can afford is to go through the process of a full pre-approval. So, for people that are ready to buy or maybe thinking of buying in 6 months to even a year, don't you advise them to start going through that process now?
Yeah, I tell them like so what I do first, let's say they're considering buying a home. I normally have them talk to me for 90 days before they even want to start looking. And I do a soft pull. So I know kind of where their credit score is at, but I see all the assets and I see the income, and I have the underwriter verify the income. So when they're already start looking, we do a hard pull. The income's kind of been done already. And as they're shopping for a home, I'm clearing the conditions from the underwriter. So when they find a house, I'm just verifying the appraisal now and title. You want to verify the appraisal title at the end, and that's it. You don't want to be verifying income or asset or credit while you're shopping, because these pre-approvals, they're worth the paper it's written on. That's why you want the underwriter to review it and clear it. And a lot of loan officers, they're arrogant. Like I've been doing it for 10 years. I'm not gonna make a mistake. Nah, it happens. That's why once an underwriter reviews it first and clears, and you can actually clear it, meet all the needs, then go out there and shop.
And you're that much more stronger as a buyer when you can say that
Yeah.
you've already cleared all these hurdles. As a seller, though, is there any way to ask or have your agent ask, like, hey, have they already been qualified by an underwriter? Can you, before you even accept their offer?
Yes, definitely 100%. Like, have you been qualified by an underwriter? He said, yes, cool. Well, if you've been qualified for an underwriter, why don't we release loan contingencies? Or I'll give you a 10-day loan contingency before you have to release it if you are that strong about the buyer.
Yeah, perfect. Love it.
If it's based on the property, I understand, or title. But if it's based on them qualifying, nah, you should have done that stuff up front.
Yeah, definitely. Just get it done. I know it's a pain pulling all that paperwork and the pay stubs and this and the that, but it's almost the hardest part about all of this. Once you've
Yeah,
gotten it done, then the shopping is the fun part. So
the
yeah,
easy
just
part.
go through the process. It's not
Yeah.
that bad. All right. Our mortgage rate, this is the question I bet you get 10,000 times
Mm.
a day. Man, are mortgage rates going down anytime soon, or should people stop waiting and just deal with reality?
I don't think mortgage rates are coming down anytime soon. It should come down. In theory, it should. But looking at the sentiment of Jerome Powell and Donald Trump, I don't think so. Because all the signs are saying to cut rates now. Inflation is down, unemployment's up. You know, people aren't spending the money on necessities, not accessories. And you can see it in the market. So they should be cutting rates, but he's not. He's holding out for, let's see how the tariffs play out. Let's see how this plays out. And people are bleeding. The reason why I know, I've never seen more homeowners who have to finally refinance out of their lower interest rate first to wipe out debt,
Hmm.
and it's starting to pick up some heavy steam. So they should be cutting rates. Also, we have about 6 months left to refinance the 9 trillion out of the $36 trillion. And if rates stay up, our country can't refinance that debt into a lower payment. And if we can't, we're going to have bigger issues. But because Trump and Jerome don't see eye to eye, I feel he's just holding out. Because of that, I don't think we're going to see lower rates this year.
Oh, that's interesting. And I've been following those same headlines too, and I know the Trump administration has said, "Come on, let's get this going." But this will be interesting to see at what point, what's the trigger where finally Jerome Powell decides that it is, in his eyes, safe to lower the rates.
But think about today is what? Today is May 21st. They were expecting the first rate cut in June. And yes, rate cuts don't directly affect mortgage rates, but does affect the bond market. But now they've iced the tariffs. A lot of things have been cooled down, right? But where are rates are now? Rates are actually climbing up, which is crazy. So because they know this guy's not letting go. That's they know Jerome Powell's not going to cut. That's why you see rates climbing.
All right. Well, see, I know I've been having the same conversation with people. I had hope for 2025 that we would
Yeah.
slowly start to see the rate trickle back down. And I'm kind of in the same camp you are. I don't see that happening anytime soon. This is interesting, and this is a phrase that a lot of realtors like to use. They say, marry the house, date the rate. Is that the same advice you would pass along?
I would probably say this instead. Make sure you at least like the house. Don't buy a house that you're not going to at least like. I do believe in buying when it's in your budget as something that you actually want to buy and be a little bit comfortable, but I wouldn't, I think there's a healthy way to do it. So if you don't find something you're in love with, then the payment needs to be good. If you find something you're in love with, just understand the payment might be a little higher.
Okay. So somewhat you agree with that statement, not 100%.
Somewhat, not to 100, because like I've seen people where, hey, you shouldn't buy that, man. That house is like the rate's low, they're doing all this stuff to it, but that's not worth it. So
Yeah.
it all depends on property too.
Well, and I, when we say date the rate, yeah, at some point the rates will change. Hopefully, fingers crossed, at some point go back down, make a few more people able to enter the market. But we don't know how long that could be, and that's the big question mark.
Yeah, definitely. We don't know how long it's going to be. I actually was hoping it was going to come in lower sooner, and I think most of my career I was hoping on that. And all the signs, all the reports say we should be cutting rates, but for some reason, like I said, these last couple of years, it's a political thing, and it's like this war between whoever, and it's not moving with how it should be moving. Like what comes up should come down, but for some reason it comes up, it stays up, or comes down, it stays down. It's just weird right now.
Yeah, it's a funky time because a lot of people I talk to, like, I've never experienced anything like this. This one's a first, and you said the same thing earlier.
Yeah, correct. Like last year's job numbers, like if it wasn't for government jobs, the job numbers would have like looked like crap. And they see it in the report. They see the part-time jobs. They see the second jobs. I'm like, how do you not see these reports and not know that our country's has issues? But let me keep up rates. Like I said, it just doesn't make sense. That's why trying to predict the market now is hard.
As far as for sellers, what's your number one piece of advice right now?
Make sure the house looks appropriate, because people are going to pay top dollar to buy your house. So if they're paying top dollar, they want the house to be move-in ready. So make sure you have your agent comb through the property and make sure it looks appealing, because you want the most buyers to come in. So that's what I would do. Number two, I would probably price it below market enough to drive more buyers in. Okay. So I see this property out in like Orange County, Fountain Valley. They cut the price by 300 grand. Guess what? They're able to sell it at the same. By the time the bidding war was done, they got at the price they wanted to. So I think right now, make sure the house looks presentable and do whatever strategy you need to cause a bidding war to drive the price up.
And that's my number one piece of advice for my seller clients right now, too. I know that they're looking and being like, well, hey, my neighbor got this 6 months ago, or so and so got that 9 months ago. It's like, let's strategize together and be able to create that level of activity that drives the price back up. And sometimes that means stepping out into the market at a price that they were hoping to get a little bit more for, but we can create that same type of energy around the home. But price and strategizing that price right now, for me, that's everything for a seller.
Yeah, definitely. Like I said, whoever that house, that selling agent has some guts to tell the seller, hey, we're going to cut the price by 300 grand. I'm sure that seller was like about to have a heart attack when they heard that 300 grand, but they end up selling it for the price that for about 300 grand more.
Yeah. It's still happening if they will enter the market at the right price. You come in too high and you sit, and people think there's something wrong with your house, and then you help sell your neighbor's home because they came in at the right price. So yeah, pricing right now is everything. Man, how do people get a hold of you? What's the best way to reach you? And I know that you do loans right here in San Diego County too.
Correct. Yeah, you can get a hold of me on my Instagram channel at What's a Mortgage. So I'm on Instagram, I'm on TikTok, and I'm on YouTube, but mainly Instagram is my jam.
Awesome. And thanks so much for keeping us informed on that Instagram page. I think it's one of the best Instagram pages out there right now. If you want to know everything about what's going on in the world of lending and how rates are being impacted by what's going on in the world, you need to follow What's a Mortgage. Min's right there on Instagram. Hey, thanks for your time and thanks for your expertise on the topic.
Of course.
Again, that was Minh Nguyen from What's a Mortgage. Follow him on Instagram. You can reach out to him right there if you have any questions about loans or what you should do to get ready to buy a home right here in San Diego County. Hey, if you liked this interview and you want to see more videos like this, don't forget to hit the subscribe button. And if you need help buying or selling right here in San Diego County, don't be afraid to reach out. All of my information is in the bio or the description of this video. Until next time, I'm Heather Myers and I follow the housing market so you don't have to.